welcome to Leaders of Tomorrow, 18-hour special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. This is the only daily MSME platform in the country, a show where you can voice your concerns and get answers to all your queries directly from our team of experts. We understand the issues that you, the MSME entrepreneur, face, and the show aims to bring you the most relevant and the most updated information on everything related to your businesses. Tonight, we're taking in all of your queries which have come in to us. First up to answer your queries, starting with my immediate left, is Shushanta Mitra, is the founder and CEO of the Lead Angels. We also have Manish Bansal, he's the CEO of SME Value Advisors. Let's kickstart then tonight's episode with a query that's coming to us on social media. Dinesh Goswami has written in to us on Facebook to say that he's in the business of gyms and he faces three main challenges and wants to know really what he can do to overcome that. The first, according to him, is that a lot of people are not aware of the existence. He says uncertainty where not enough people are visiting the gym regularly. And he says that impacts the business. And third, of course, is persistence, where due to the lack of resources, they're unable to follow up their leads. He wants to know what our experts suggest. Seems like he has a lot of starting problem issues. For someone who's in a space which is, physical brick and mortar kind of place, what would you recommend?
So I think the first thing is to look at the business. That here, if the person does not come, it's a sort of business with a perishable commodity. It's like any other perishable commodity, because the time goes and there's nobody there, he's lost. So one of the things is to have differential pricing for different times of the day, and that could be good. A lot of gyms, what they do is they have a monthly plan or a quarterly plan and a yearly plan sort of thing. There are also now a bunch of marketing businesses which help you to sell your gyms. So there are those things. The second thing I would suggest that he should look at creating a community around the people who visit his gym, so that they sort of spread the word, and if they bring in a friend, then they get some concessions, some sort of loyalty program, referral program, so that it can grow organically as well without spending much money. And of course, having an online presence and again reaching out to the community in and around where he is located is something that he could explore.
Sure.
So, so there are three questions primarily raised. The first question, he's saying the people don't know me. Third question, he's saying I don't follow the leads primarily, or not able to follow the leads. Second in between was people don't visit. So I don't think he can address question number 2, because it's a people's choice whether they want to visit or they don't. But the first and third are probably the questions which he can definitely address. And my only suggestion would be that there has to be a dedicated business development resource, because once you have a dedicated person with a clearly defined responsibility, his job is going to be create a visibility in the locality they are in, because it's not a very large problem to address, in the sense that you are not going to address, or you are not going to create the visibility at the national or even at the regional level, because gyms are very, very specific or centrally kind of, the location is very limited. So what you have to address is address that part with a dedicated resource, with a clearly defined responsibility to create visibility. And once visibility exists, obviously the third problem of the dedicated follow-up, because there's a dedicated resource, also gets addressed. I think it will do the great job. Just do the pamphlets in the newspaper, invite people free to experience for 15 days. All that stuff can be done, but dedicated resources, I think, are very, very critical.
There's also some software available which can help him, manage his leads and so on and so forth.
Dinesh, also we've just done a panel discussion on organic branding here on the Leaders of Tomorrow. Do hope you get to catch that episode where you can work with both your peers as well as your competition to try and talk about and market your product. Let's take in our next query. This is a call that's come to us from Pawan Pawar. Go ahead, Pawan.
One is how do we acquire the required technical skill sets and keep them retained? One is that, and the next one is since we are a 100% export-oriented company, we do a lot of internet marketing, and the costs are in dollars. So we are not getting the right, the return on investment on what we are spending. So what do we do in order to maximize our spend and get the best out of it?
All right. So Pawan essentially is an export-based company, and his query is that they're incurring the marketing spends in dollars, and the ROI, he's saying, is not as what they would likely expect it to be. Would one of you want to tackle that question?
It's of course a difficult. It's very difficult to how to improve the ROI on marketing spends. I would say that, and sometimes people, for example, one of the things that people spend a lot of money on is Google AdWords and realize at a later date that it's not giving them any returns, is to make small experiments rather than committing large sums to it, and try 2 or 3 different things over a period of time and see which one is working, and then start spending money on that rather than making one big bet. Make multiple smaller bets, and whichever one of them works, one would do. The second is that to have the right people, maybe the resources required, the team, the skill sets required to figure this out may or may not be available within the company. So maybe taking an expert advice from his peers, other people, or even employing somebody or outsourcing this job to a good marketing company would be some of the alternatives that he might want to see.
Okay.
Surendra, my take on this question is a bit different. I always believe that business happens because there is a trust. That's the very first thing which will take a discussion to a business. So if you look at, and we are doing a bit of export, we also work with the companies which are into business of so-called dealing with only the offshore customers. The model which works very well is that you have to have the origination or the relationship guys onshore. So the best is for people to be there in the local presence, right? And they can be partners in the business, they can be employees with little bit fixed and more kind of payouts linked to the business, more variable payouts. So this is the best model, because then the origination can happen locally. People can see each other, touch each other, feel each other, and can build that trust. And if the local guy has the good network and the presence, business can leverage upon that as well. And then the execution can very well happen from here. I think this is what I will recommend, that you have to have the local guys in whichever markets you are tapping, the guy of eminence, guy of the reasonable influence and circle of relationships. I think that will do a good job, and then keep executing the stuff from here.
All right, our next query is one that's coming to us from Neeraj Kumar. He's calling in with his question. Neeraj, what's your question?
We build a platform-enabled web for media companies. I would like to know, how do we attract best talent when availability itself is limited? What is the benefit of joining STPI in current year? And how do we market our services in North America region when we do not have a physical presence there?
So we were just talking, in fact, about having an on-site presence for someone who's in the export markets. But Neeraj says that he doesn't have a presence in his export markets because having an on-site person, of course, comes at a higher cost than an offshore person. So what would you recommend? And also he wants to know about STPI. So is there something there you can suggest?
So if I were to take this question, as I said earlier, the cost could be pretty high to get a guy on site. So best is to get someone as partner. What does it mean is that the guy comes on the profit sharing basis. That's a lot more easier, because that's the model I have seen and I have myself been part of in terms of execution at several businesses. Because otherwise, keeping the cost in the dollar terms will cause a lot of damages if the business doesn't happen.
So the software technology park is like a 100% export oriented unit where people can set up and get certain benefits in terms of infrastructure as well as tax and other things. A certain amount is allowed to be sold in the domestic tariff area also, so it doesn't necessarily mean entire amount has to be exported. I think the key question that he must, Neeraj should look at is, where will he find the right people in software business? Finding talent is the most important thing, and talent which he can retain and so on. So if he is making a choice of different locations for his office, STPI does give certain benefits, but if it is impacting his talent resources, he would rather be somewhere else.
Okay. All right, gentlemen, let's take a very quick break on that note, but there's much more on the other side. We'll continue taking in all of your queries. Just stay tuned. Welcome back here with us here on the Leaders of Tomorrow, and tonight we're taking in all of your queries with our panel of experts. The government has been talking about the sunset clause for STPI. Has it finally happened? Because it's happened, been extended, extended.
That keeps on happening, yes.
All right, that's in response to your query, Neeraj. Thanks for calling in with that. The next one is also coming to us from Neeraj, and it's also a call. Go ahead, Neeraj.
Okay. We are an IT company specializing in data storage, backup and disaster recovery solutions. As people are our biggest asset, I would like to know how to find relevant and skilled manpower for a tech company like ours, and how to retain them for a long term.
So, everyone, I would assume, wants to join the tech company with the benefit that you can probably go on site, but he clearly is having a challenge finding talent, because I assume it's a very competitive market as well. What recommendations would you have?
So I think one is to, in the top tier engineering colleges, is very difficult for smaller companies to approach to. So then you go to tier 2 and tier 3 and tier 4 sort of engineering colleges, where the talent may not have the skill sets to be able to work, to provide. So the only way is to probably train people on your own, and maybe it will come at a cost, but that's the only way that you can be able to get productive people to join you. And here I would say that interacting with your potential employees much before they were to join you and create a program of engagement with them would probably help you in attracting them to your company.
Okay, Neeraj, that's in response to how you go about finding talent for the IT industry. The next query is coming to us from Yogesh Kapadia, who's written to us on Facebook saying, could your experts suggest to us how we go about converting a limited company to a private limited company, and also about registering his company as an SME. Is that possible? And how much of paperwork is possibly required there?
I am, of course, not a legal expert, but the difference between a private company and a limited company is the number of shareholders, and it can only happen if he is able to, do that conversion. I don't think that requires too much of paperwork.
Sure.
And the SME registration, I think on MSME site, you can go to it and register.
Sure.
Yeah, so the easy part is just to get in touch with your chartered accountant, and he would be able to help you, in conversion, which is not a difficult task.
It's not a very difficult task of converting.
Yogesh, so it's not going to be a very complicated process for you. Let's take in our next query, and this is an email coming to us from RK Sinha, who's written in to us to say that how do you think that SMEs or startups can run their businesses without necessarily raising finance from banks, because raising funds is proving to be a bit of a challenge, since it often turns out that the SME's credentials or aspects are not strong enough really for the banks when it comes to the banks lending funds. And Sinha, we were talking about this earlier. In fact, Manish was mentioning that you don't necessarily need to rely on the banks. You can look at your customers, you can look at your vendors, etc. But anything that one of you
also we run an angel network. We invest in SMEs and so on, and angel networks, VC funds. There are also now private lending platforms, peer-to-peer lending platforms. So there are now multiple financing sources, as Manish was saying, available to people to raise money. Also, not to forget friends and family who can also support you for the initial capital to set up the company.
And just to add to what Sushant said, don't just look at the debt, because most of the time people only think in the debt context, right? Think of equity. And I have said this in the program earlier as well. Equity is a printing machine right in your backyard. Promoters or the entrepreneurs have to really start thinking on equity and how they can print shares and maybe collect money from the people around, friends, relatives. Sushant talked about, so for example, angels or some other sort of investors. And what it does is, when you bring in the equity, Sunanda, it also creates the room for the further debt, because bankers at the end of the day get the support from the equity. So it actually not just adds to the balance sheet right now, it creates the further room for raising the capital.
Sure.
So people have to really think on the equity, which very rarely people do.
All right. All right, so that's in response to your query, R.K. Sinha. The next one is a query which is coming to us on Facebook from Jitendra Verma, who says, what do investors look for? I'm sure the textbook answers are not entirely dependable and want to know the truth. Also, it seems as if everyone in this funding universe is investing in businesses and not in ideas. Where are such investors who invest in ideas, and why are investors much more averse compared with nationalized banks? And that's completely in, up your alley. So let me ask you to start responding.
Sure. So I think what do people look for? So as an investor group, we of course look at the business and as much and perhaps more deeply in the founders or the team which is running the company. And do they have the persuasive abilities? Do they have the staying power? Are they really focused and passionate about what they are doing? Are some of the things that we look at. Yes, we do invest in at companies at the idea stage as well, and we look at it from a perspective that where can the idea go and what is the potential market, even though the company may or may not have any business on the ground. There are other angel networks apart from us who also invest at the idea level. There are incubators and accelerators who also induct teams with just an idea and help them to take it to the next stage. Are we really, we are the guys, no nationalized bank would invest in a business without revenues or even profits. Here are equity investors, angel investors, who are not even asking for any collateral or guarantees or anything like that, and willing to be risking the entire investment on just an idea. And so I don't really agree with him that investors are more risk averse compared to nationalized banks.
And you don't agree also that investors are not looking at ideas but more in the business? It's an equal thing, you're saying?
Yeah.
Okay.
Yeah, so I would agree with that part. I think there are people who are ready to invest at the early stage, very early stage at the idea level, but it's just the question of connecting. Maybe they are few in the numbers, because at the end of the day, as customers do business with you when they trust you, similarly investors will give money when they trust you. As Sushant talked about, you have to have a business, not just the idea, but the business model, which is able to convince investors to put the money. There has to be a storyline at the end of the day. How will the revenues come? How will the expenses happen? How will you break even? How will you grow the business? Where is the challenge and the problem? Number of times people walk into the investors asking for the money without having clarity on what problem they are addressing clearly. So what I'm saying is, do some more homework and try to connect with the right set of people, because if you're knocking the doors of the wrong set of people who are more looking for established businesses, it will not work. Sure. So it's just the question of connecting with the right sort of people, maybe angels.
All right, time for one last query then, and this is coming to us on social media from Nilesh Shah, who says that they're a taxation software company and are facing a couple of major issues. It takes a long time, he says, for new employees to get trained to use their software, and when such trained employee leaves the company, soon after getting trained, it becomes difficult to arrange an immediate replacement. He says his target market is largely chartered accountancy and tax. A very small percentage is as far as corporates go. The market for these products, he says, is getting increasingly saturated, and they're looking at alternative marketing sources rather than hiring a professional. He says if they explore emailing, mobile messages or social media, they don't have proper knowledge really of some of these routes, including social media marketing and non-availability of reliable database either for email or mobile marketing. What do your experts suggest is what he wants to know.
Yeah. So I think the first issue is that he has a software which requires a lot of training to the users and the employees who are going out to sell the product. And one way to tackle this in the medium term is, of course, to change the software, to modify it so that it becomes easier to use, both for the customers as well as therefore it will become easier for the sales team to go and sell it. So that's one part. The other is that how does he sell apart from the old world model of cold calls and walking through the industrial areas of the cities, is to create an online presence, do telemarketing. These are newer ways of reaching out to his customers. I would assume that he could also do seminars with particular industries and do demonstrations to them so that he is able to expand his reach.
Sunanda, I see a line here which says these products are kind of saturated. So one is the product challenge, and he has to find whether the product is really relevant anymore. And if it's not, they have to, the guy has to take a call, Nilesh has to take a call. Second part, he talked about the marketing challenge. And I think you and me can't internalize all the competencies. Better it is that we find a guy who can handle that problem and trust with him, and then go and experiment the guy. There are a lot of social media so-called marketing agencies which are there. So he can probably interact with some of them and figure out whether one of these guys actually help him in the business. So he has to address both the challenges in a separate manner and go about it.
Completely out of time then on this episode. Thank you, gentlemen, very much for being with us here tonight. Do remember, if you have any queries related to any aspect of your business, you can always write in to us at leadersoftomorrowtimesgroup.com. You can tweet at me personally at Sunanda_J. You can reach us on social media using the hashtag LOT, or call us on that number you see flashing on your screen. We promise to have all your queries answered. Thanks for watching. Have a good night.